AI requires a lot of compute power, and the cost for your AI workloads can spiral. That is, unless you're running on OCI, Oracle Cloud Infrastructure. This was the cloud built for AI, a blazing fast, enterprise-grade platform for your infrastructure, database apps, and all of your AI workloads.
Right now, Oracle can cut your current cloud bill in half if you move to OCI. Minimum financial commitment and other terms apply. Offer ends March 31st. See if you qualify at oracle.com/WSJTech. Oracle.com/WSJTech.
Good afternoon. Getting right down to business here. We're doing it live. More at 4, weekday afternoons right here on 790 KBC. Live on the air and streaming live online worldwide at KBC.com. The on-demand Mottek On Money podcast, KBC.com, Apple, iTunes, YouTube, all your favorite podcast platforms. A record-shattering day on Wall Street. Stocks moving to a record high as the broadly based S&P 500 ended the day higher after a relatively quiet day of trading coming off the 3-day President's Day holiday weekend. The S&P 500 moved up 10, make that 14 points to 20,041. NASDAQ up 14 points to 20,041. The S&P 500 was the one in the spotlight today of 14.5 points at 6,129. That's the one that hit the record high today. And the Dow also higher by 10 points at 44,556. Energy leading the way today after rallying 6%. The energy names moved up. Electric company, which serves customers in Arkansas, Louisiana, Mississippi, and Texas, reported stronger profits. Entergy is the name of that energy company. We did see a mixed day today. Meta Platforms ended its big rally today, falling about 3%. Meta shares down more than $20 at $7.16 and change. This after about a 20-day winning streak for Meta, the parent company of Facebook's. We've seen the stocks climbing back to record highs now, thanks in large part to stronger than expected profit news, even after big disruptions recently and the nervousness about tariffs and so forth. And then, of course, we had the DeepSeek news, the Chinese AI startup that said it was able to match the performance of big American rivals without having to use top-of-the-line chips. And that, of course, had spooked the market about a couple of weeks ago. We are seeing a rebound, though, in the Mag 7 names led by Meta, Facebook. Up until today, we did see that pullback. Meanwhile, gold continues to hover at or near record highs. Are you buying or selling? We'll get an update on the Main Street economy this afternoon. The Main Street economy here in Los Angeles and West Hollywood. Elliot Salter will be joining me live. He's the owner of Elliot Salter Pawn Shop and Loans in West Hollywood for something like the past 50 years or so. He knows what's going on the local economy, and certainly a lot to talk about with gold hitting record highs recently. Susan Shelley, columnist for the Southern California News Group and host of the Howard Jarvis radio show, heard Tuesday nights on 790 KBC, and our great Cumulus Media sister station in the Bay Area, KSFO, will also be joining me live later this hour to talk about what's happening with the epic recovery underway following last month's severe firestorms and the recent mudslides. Taking a look at the cryptos now, we see a Bitcoin having a rally today of about $1,400 at 95,009. Make that 95,571 here at the moment. Ethereum up 22 at 2,672, and Doge at the moment at 25 cents. Joining us live now on this record-shattering day for the markets. We're going to talk about your money, the markets, the economy, and the whole works now. Joining us live, Jim HAUSBERG, investment expert, managing director of the HAUSBERG Group, Hightower Advisors in Beverly Hills. Jim, thank you very much for coming to the line on what's turned out to be a record-shattering day for the stock market here.
Yeah, Frank, you stole a little bit of my thunder. It's been, a very exciting market since the beginning of the year. And rallying into the somewhat scary negative news on DeepSeek coming out of China with their AI product. Of course, the fear still exists, but is shaken off the tariff fear, at least for the time being. And then we got the bad CPI print and PPI prints last week. But the market has shrugged off all this bad news. And as you said, the S&P is back to an all-time high, and the other indices are doing quite well. There's a lot of stocks hitting new highs. It's not just the index, Frank. Last 2 years, we really lived off of the index from the Mag 7, which became about 35% of the S&P from a market cap standpoint. Some continue to trade very well. Meta was down today, but as you said, 20 days up. NVIDIA's rallied nicely, but still back to where it was earlier. And Microsoft has been pretty weak. Software overall has done well, But the big gorilla there, Microsoft, trading down and has been down most of the year. Amazon continues to trade well. A lot of big names buying Google, even though it's sold off. And Tesla's down a bunch since the beginning of the year, but is starting to rally back a little bit. So it's been a mixed bag, but every sector in the S&P, Frank, is higher for the year.
On the air live with Jim HAUSBERG, who creates his own thunder when he comes on the air here on 790 KABC. And it's great to have you back with, it's been a while since we've chatted behind live microphones here, Jim. We've been getting some new readings on the economy lately. That retail sales number came out a bit disappointing last week ahead of the 3-day holiday weekend. What's hot right now in your view here? Are you doing anything still with the Mag 7 and the big names that propelled this rally last year?
Well, as I've said many times, we take a defensive approach, but we do buy growth. I'm still a big believer in dividend growers, Frank. To me, the companies that are growing their dividends in excess of 12, 15, 20%, and there are a bunch out there, and continue to put the same amount into CapEx, I think those are the best companies to own for the long haul. And those are the ones that weather the storms better than most. The bond market, by the way, at the same time is, somewhat down, flat a little bit, but you can still, earn that 4, 4.5, and 5 in some cases. If equities can get that long-term return of 10, you got a pretty good balanced portfolio right now. So I continue to remain positive. I think S&P earnings have talked down a little bit after a very robust fourth quarter. Earnings for the S&P are up about 15% for, let's say, 80% of the companies have reported, and sales up in the 5 to 6% range. We'll see if that continues the rest of the year. I would play that down a little bit. But my one concern is the 270 number that's been thrown out for the S&P puts the S&P at 22 times this year's number. Not a low number. I'd like to see lower 20s, but if the growth continues, that's why the markets are where they are. And, there are some calling for 7,000 by the end of the year. Certainly possible. I would be a little bit of a contrarian. I'm not overly concerned about the inflation prints. I think bonds are a good buy in here, and I think they're going to head lower.
On the live with Jim HAUSBERG, HAUSBERG Group, Hightower Advisors in Beverly Hills. And are you following cryptos now? Anything getting your attention in that space?
Well, I knew you'd bring it up, Frank. Look, I'll say what I've always said. If you're a trend follower, you probably need to own it. I don't know where it stands exactly on the charts, but I can't figure out, and still, don't know many people who could figure out the value. Like, what is it really worth? Maybe one day we'll have a better feel for that. And the same thing with gold. I mean, gold's hitting highs, as you just said. The interesting thing about gold is the flows into buying gold through the ETF, GLD, has been light. So it's an area that's hot. It's an area that's moving, but you're not seeing a lot of buying going into gold. So there probably has more room to run. It's not, at this euphoric stage. So again, I'd stay with quality. I'm a little concerned about the multiple. I like, having a decent cash position today at that 4% level. We have some managers that have big cash positions, and we feel comfortable. The 22% and 26 returns on the S&P in 24 and 23, you got to really go back in time to see that 20-plus print 3 years in a row. It's happened maybe 4 or 5 times since the 1950s. So I would expect the market to be up for the year based on what we're seeing now, but not as much as the last couple.
All right. We talked about so-called digital gold. What about good old analog gold, the traditional gold, which has been hitting record highs lately? I'll be talking more about that later this hour. But we see gold rebounding today nicely. Also, silver back above $33 an ounce here. Jim HAUSBERG. What about all that?
Well, I just brought that up a little bit. I think that the rally in gold continues. And as I was saying, there has not been a ton of buying through the ETFs. So it's kind of light from that standpoint. So I wouldn't be surprised to see it trade higher. As far as silver goes, don't really follow it, but it's obviously used a lot more than gold. Gold, again, is just the undigital, the analog gold, used obviously in making jewelry. I don't know how those sales are going, but, it's caught up with the rate of inflation a bit. It's near all-time highs, but, you're going to expect to see that when you see stocks hitting the levels that they're hitting. So a part of a portfolio, yes, buy it more on weakness, but that's really my feeling on that space.
All right. And First of all, I should have mentioned, I hope everybody's okay with you and your firm following this horrific firestorm, and the massive rebuilding effort is underway here now in Southern California, just getting underway, and a lot of attention on various commodities and companies that will be involved in the rebuilding. What are your thoughts on all of that?
Yeah, very sad. I live close by. We had to evacuate, but we're fine. And I just feel for a lot of people I know, a lot of friends, and it's just been rough. And I think it's going to be rough for a long time. I don't know how to play it, except I would just assume some like copper and lumber. Those things may do well for the rebuild that's coming. Some home builders, some prefab homes I'm hearing about. In fact, Berkshire Hathaway owns the largest prefab home builder called Clayton Homes. So they do both the mobile homes and the prefab. So that's probably, that's a great stock to own. By the way, talking about cash on the side, he's got $305 billion, Buffett does, on the side. So it's not that he's bearish on the market, but he probably thinks it's highly valued and will buy on weakness if he sees opportunities. He bought into Constellation Brands today, which has been trading poorly. So he's ready to buy, I think, on weakness, and I would recommend clients own that stock because you're getting an incredibly well-managed business, a lot of private companies in there, and big public shareholder holdings and public companies. And even though he's not going to live forever, there's a great group in there that's managing it, and I would expect good returns there. And again, a lot of money on the side.
Very interesting, and notably, he lined up on Apple last year, right? What about Apple here with some of their new product announcements coming this week?
Yeah,
Apple
stock
hovering around
stock's
240.
trading
What about
well.
Apple?
Yeah, stock's trading well. I mean, it got down. It's held that 220, 219 thing on the support and bounced right back to that 240 level. Nvidia similar on its bounce. I just don't know if they're going to take off and start hitting new highs. I think other sectors are going to pick up the steam. So I'm not bearish on tech by any stretch, but the moves have been so vast over the past couple of years that I'd be cautious with new positions, but look for weakness in all of them and maybe accumulate some stock there. Like I was saying, Google's come down a lot. I was reading over the weekend a lot of big hedge funds and just big investors taking positions or adding to their positions in Google.
All right. What about bonds here? Are you making any adjustments in recent years? A lot of talk about whether that 60-40 mix still works, that traditional portfolio. What are your thoughts on bonds here and any portfolio adjustments?
Well, I like the rate you can get on safety. I really do. I mean, we've talked for, God, Frank, to go back 20. By the way, happy birthday, Frank. Was it yesterday?
Thank you. Yes, sir.
Yeah,
Thank you.
I'm not going to tell everybody how old you are because I don't know. But that you have resistance now and support a little below your age. So anyway, I would just say that if I can get 4% to 5% in safety, I'll grab it, and that's what we're doing. Treasuries, or even money market funds, or muni bonds in the 2.5% to 3% tax free, whatever those yields are. I think it makes perfect sense in this type of environment because there is still a lot of uncertainty. And by the way, we didn't talk about Ukraine at all, but maybe progress there is going to lead to better markets. Interesting to get sidetracked here, which I tend to do. The European markets have been very strong this year. Again, they were down big after the election, but you go through Germany, France, and Spain, and these things are up double digits. And we haven't seen that before. And these markets are beating the U.S. markets, albeit for a short period of time. But when you go back over the past 10, 20 years, I know it's a long time, the foreign markets are way behind the U.S. So I wouldn't be surprised to see those markets do better. But on the bond question, yeah, I'd buy them as part of a portfolio.
All right. And you mentioned appropriately, talk about maybe some sort of a resolution to the Ukraine-Russia war, and that recently sent the German DAX index to record highs. And you're right, we are noticing that rebound overseas, and even some analysts recommending overseas markets in the face of all that's happening. In the meantime, oil has come under downward pressure despite the nervous time in the Middle East, and also concerns about China's economy and of course the Ukraine-Russia, if that it does get resolved, that would put further downward pressure on oil prices. What about the oil names here? We did see one energy name rally today. This Entergy, that's actually an electric company that serves the southern part of the United States.
That's an interesting area. The electric utilities are really interesting. Not all of them, but the amount of electricity that's coming on with all the things, the AI and the continuation in all this technology is using up a ton of energy. And some of these utilities, which in the past were sleepy names that people would own to be defensive and get the yield. Now, a lot of them are regulated more than others. So you have to know your names, but there's an ETF that I think gives you good exposure. So, and some of the nuclear stuff might do very well, as that seems to be maybe a choice going forward. And there's a lot talked about that, Amazon, Microsoft getting involved in that space, and the whole digital realty space too, the storage and the data centers. So there are a lot of interesting areas. That's what I was saying in the beginning. It's an exciting market, Frank. There's a lot of places to look for ideas. I don't short stocks, but there seems to be a lot of stocks that, if you're playing the short side, you might be interested, that are pretty highly valued. So it gives a lot of professional investors opportunities on both the long and short side of the market.
All right, let me ask you the big question here then, Jim HAUSBERG. Any other specific places where you are putting money now and or taking it off the table?
I'd love to give you something exciting, Frank, but not much. I mean, it's all our basic managers we use. We've got some value, growth, small. I'll give you one out of favor sector, and that's healthcare. And again, another ETF in the healthcare space. I apologize for not knowing the symbol, but Lilly's had a big rebound. They've got the one of the weight loss drugs, although Novo Nordisk, who has the other one, has not rallied. So Lilly seems to be the big winner there. But so many of these companies, Merck, J&J, Pfizer, they're way behind the market. Stocks are cheap. They pay dividends. You're talking 10 to 13 times earnings versus a market that's 22. So we're starting to look at the space. We don't make sector bets all the time. We really would like to see our managers make those investments. But I think if you want to buy something out of favor and be a contrarian, I would look at the healthcare REIT. Healthcare, well, REITs too, but the healthcare ETF.
ETF, okay. And what about retailers and restaurants too, suddenly rallying lately, right, as people are dining out more?
Yeah, I'm hearing good things on Walmart. I know their earnings are coming soon, doing quite well in their food area. Obviously, Amazon is, has his own thing going. But between Amazon, Costco, and Target, I'd stay with those. I'm not really up on the restaurant stocks, so I don't have a good answer for you on that. But Chipotle's been a huge winner for a long time. But what I was trying to say is if people look around and look into markets, there's a lot of interesting areas that are making, pretty big moves, much better than the index. I think if you're an active stock picker now, this could be your time to shine versus just owning the S&P. But certainly owning the S&P has worked out so well for so long. So I'm not avoiding that, but yeah.
Super, Jim. Well, thanks for joining us on an up day. It was a slightly higher day, but good enough for an all-time high here for the S&P 500. Yep. So you're making history here live on the air with us. Jim HAUSBERG, investment expert, managing director of the HAUSBERG Group at Hightower Advisors, Beverly Hills. Jim, always great to speak with you, sir. Thank you very much for joining us live here this afternoon.
My pleasure to be with you, Frank, and all your listeners. Thank you very much.
Thank you, and let's get right out to the freeways now on 790 KABC. Mottek On Money continues here on 790 KABC. Good afternoon. We do have a record-shattering close for the broadly based S&P 500 today. The S&P 500 up 14.5 points, good enough for a record high 6,129. The Dow moving up 10 points at 44,556, and the NASDAQ gained 14 at 20,041. All this coming off the three-day holiday weekend. Sure feels like a Monday today, but it is Tuesday coming off the President's Day holiday weekend. The VIX index, the volatility index, did move higher today by 4%. The yield on the 10-year note, which impacts the fixed-rate mortgage rates, now back to 4.55%. Gold rebounding today. It's been hovering out or near all-time highs in the last couple days, moving up nearly $5 at $2,953.60 an ounce. And silver has popped above $33 an ounce. Meta ending a 20-day winning streak today, pulling back $20 and change to $716.37. Meta, the parent company of Facebook. Apple down 13 cents at $244 and change. Tesla down $1.73 at $354.11. Super Micro shares in the plus column today by nearly $8 to 55 and change, a gain of 16.5%. Intel also rebounding today, up 16.1%, and Walgreens stock moved up 14%. Taking a look at the cryptos now, let's bring up Bitcoin here, up about 1,300 at the moment, 95,448. Ethereum up just about $22 now at 2,672. And Doge at the moment at 25 cents. Among the losers today, we see shares of Medtronic pulling back today. Among the big losers, among the S&P 500 stocks, down about 7%. And Allegion also pulling back. That's also part of the S&P 500. Allegion shares down just about 6%. And another loser today is ConAgra Brands pulling back about 6% on the day. Price of oil back in the spotlight, hovering just below $72 a barrel now, down 12 cents to $71.73 a barrel in New York. Coming up on 790 KBC, Mottek on Money, we'll be taking a closer look at the gold and silver prices. Silver back above $33 an ounce, gold hovering at or near record highs, getting close to $3,000. We'll get a ground level view of how people feel about gold. Are they buying or selling these days? We'll get an update from the one and only ELLIOT Salter. 50-plus years at ELLIOT Salter Pawn Shop and loans on Santa Monica Boulevard in West Hollywood. We'll talk about that and also what's happening on the recovery front here in Southern California with Susan SHELLY, columnist at the Southern California News Group, which includes the LA Daily News. That and more straight ahead. Right now, the latest news for you here on 790 KBC. Mottek On Money continues here on 790 KBC. New attention in how taxpayer money is being spent these days, something our next guest has been following for decades. She's also following the massive firestorm recovery efforts here in Southern California very closely. Joining us live now, Susan SHELLY, columnist for the Southern California News Group and host of the Howard Jarvis radio show, heard Tuesday nights on your favorite station, 790 KBC, and our great Cumulus Media sister station, KSFO, in the Bay Area. Susan SHELLY, thank you very much for coming to the line this afternoon.
Thank you, Frank. Great to be with you.
And your latest column getting a lot of attention. Trump, Musk are upending a broken status quo. Give us your thoughts about what's happening with Doge and how new attention's focused on taxpayer money and how it's being spent.
Well, this is just a remarkable thing. You know, we've all seen these let's cut waste and fraud speeches from politicians for years and years, and they never do it. But what's happened here is that President Trump has made several changes that allow him to take more control of the civil service by firing people who make policy instead of having essentially a permanent government that essentially outlives the elected officials. And so by bringing in the Doge team and having all of these pre-vetted appointees ready to go on the first day that he was in office, not the cabinet secretaries who needed Senate confirmation, but the people right underneath. They moved all those people in, lawyers, HR professionals, and these technology people, and they immediately started going into the payment system and finding out what the government was spending money on. We've never seen anything like this. They started pulling out fraud and pulling out improper payments and no codes for what the payments were going for or where the budget item was that corresponded to them. They are coming up with programs that are insane that we've been funding all over the world. I think they're up to $80 billion in cuts, and we're not a month into the administration yet. It's just remarkable what they're doing.
Certainly, and a lot of attention focused on the Social Security payments going to people who are 150 years old.
Now, I really have questions about that. Are we really sending checks to those people? Or is this one of those technology questions? You know, the government computers run very old software. Some of them are running on COBOL, and it's so outdated. There's hardly anyone who even knows how to write it anymore. And I believe some of these dates default to 1900 or to 1875 if there's a database that's essentially ported into the system and the field is empty. it defaults to a date. So some of it might be that. I would hate to think that we're really sending Social Security checks to people who were there when George Washington was president.
Now, that is really something. Now, you've followed this very, very closely, and anything in particular on that spending list that you reviewed very closely that's gotten your attention? Of course, we've seen that absurd list of how, and it's sad, of course, you don't know whether to laugh or cry in this case, how your money's being spent on some ridiculous line items.
Oh, it's crazy. We paid, I think, $32,000 for a transgender comic book in Peru. Now, why anyone needs that at all, I don't know, but why we need to pay for it in Peru is completely unclear to me. We paid $70,000 for a diversity, equity, and inclusion musical in Ireland. I don't know why we're producing musicals in Ireland at all, let alone DEI musicals. And the silliest one that I saw, my personal favorite, was $3 million from the Department of Education for a report on why no one was reading the reports. That was my favorite.
Wow. That's a good one. That's a good one. The Department of Education, what do you see ahead there? President Trump says we're going to do away with it. The Department of Education, along with FEMA, by the way, were created during the Carter administration, right?
Yes, I believe so. Certainly the Department of Education was. And, this is a question of whether the government in Washington needs to have a department to oversee policies and to be one more layer of regulation on the way to delivering the service. The federal government can certainly fund disaster recovery in the states without having a separate agency with its own rules. We've seen several instances in disasters where people are on the roads trying to provide help and FEMA is stopping them because they need to do paperwork or they need to get permission or there's a regulation that's in the way, and that's just not helpful. So whether there's any corruption going on in the awarding of the contracts is another thing to investigate. But certainly just the idea of having a federal agency to supervise what could be done at the states, it does seem like an area ripe for cuts.
All right, turning now to the epic recovery effort that is underway, and you've had a chance to take a look at the latest news related to all of that coming out of City Hall, as well as private efforts, including Rick Caruso's new efforts. Give us your assessment of how this recovery is going.
Well, it looks like it's going to be slow, which I'm sure is a tremendous frustration to everyone. Once again, we have all these layers of government. We have federal regulations, we have state and county and city regulations, and lots of bureaus that have to issue permits. And, how quickly are they going to do it? We don't know. It's a difficult situation. But something I was following out of the mayor's office was this hiring of Steve Soberoff to do 3 months of work it was not really clear what the work was. And the mayor made it sound as if he was giving his services. That's what she said in her press release when she announced it on January 17th. And then it turned out the LA Times reported that he would be paid $500,000 from unnamed charities. And I happen to know that the mayor controls 3 charities, and she raises money for them with behested payments. Now, that's a particular California species of donation, where an elected official can call a company with business before the city or contracts with the city and ask for a donation, no limit on how much it can be, for these charities that she runs. And what do? Well, it's not to put too fine a point on it, it's kind of a slush fund for the mayor to hand out. One of them is called the Mayor's Fund for Los Angeles. She was raising money for $1 million at a time from healthcare companies, Kaiser Permanente, Molina Healthcare of California, $875,000 from LA Care Health Plan. Some of these have contracts with the city. And a behested payment means that the mayor asked for it. It's not volunteered independently. The mayor calls up and asks for it. And that is a category that has to be reported, but there's no limit and there's no restriction on asking for it. So I think that's something really that voters need to look at. This is a statewide problem. This is something that Governor Newsom did, something that Governor Brown did, something that Mayor Garcetti did, something that Lieutenant Governor Eleni Kounalakis did. She raised $300,000 to redecorate her office with behested payments. She called up unions and asked them for money, and they came through with money. Does she owe them? What kind of a story is this? And why doesn't it get more coverage that our elected officials are essentially shaking down companies and organizations with business before the state? So that's what I learned from the Steve Soberoff episode. He immediately renounced the money as soon as it became public, which tells you that they don't want anyone looking at it. And I think it's concerning.
See it tonight, read about it tomorrow, but hear it now live on Mottek On Money on 790 KABC. There's that word again, behest. I remember we talked about this when you exposed this, and it should be getting a lot more attention as it relates to Sacramento and Governor Newsom. You mentioned just now. Maybe you can give us another lesson on this word. What does it mean and how it's impacting California politics?
Well, behested is, in other words, at the behest of the politician. It's a donation made at the request or in connection with, in concert with, in coordination with a public official, meaning essentially that they ask for it. In other states, they have an easier word for it. In other states, they call it extortion. When an elected official calls up a company with business before the state or the city and says, I'd like you to give money for my inaugural committee, or I'd like you to give money for this governmental purpose that I've got here, or to a nonprofit that's run by my relatives, I'd like you to donate. And by the way, nice contract you've got there. Shame if anything should happen to it. This is legal in California. And these are called behested payments. And you can find the data for the city at ethics.lacity.gov. You can find it for the state at the FPPC's website, the Fair Political Practices Commission. You can just look it up on Google or any search engine, behested payments. And you can see our elected officials shaking people down for money.
Well, we need to start letting people know about this and maybe do some publicity for those websites so that people can understand what's really going on here. And Susan, you do a fantastic job. We'll be listening for your show tomorrow evening here on 790 KABC as well. I'm sure you'll have more on this. Susan Shelley, columnist for the Southern California News Group and host of the Howard Jarvis radio show, which is heard Tuesday nights. Actually, tonight. I keep thinking today's Monday, but it is Tuesday, right? We're coming off the three-day holiday weekend.
Yes.
Heard tonight, Tuesday night, 790 KABC, so be sure to tune in this evening, as well as our great Cumulus sister station in the Bay Area, KSFO, also carries the program. Susan, thank you very much for joining us live here this evening.
Thank you, Frank.
Out to the freeways now on 790 KABC. Frank Mottek here. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Well, now with the U.S. debt at more than $36 trillion and climbing, possible recession on the horizon, and the development of the digital dollar, central bank digital currency, it's more critical now than ever before to safeguard your assets like your cash savings and retirement accounts with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Stop worrying about your retirement and the markets and cash savings in the bank. Feel confident, prepared, and in control with physical gold and silver. Give Joe Morgan a call at 1-800-753-8534. Mention Frank Mottek, and you could get $1,000 worth of silver with a qualifying purchase. Call now, 1-800-753-8534, or visit UnitedGoldGroup.com. Mottek On Money continues here in 790 KABC. Gold continues to hover at or near record highs, getting close to $3,000 an ounce these days. Silver has popped above $33 an ounce. Platinum hovering above $1,000. Are you buying or selling these days precious metals? Well, let's get an update now on what's really happening in the real economy here in the Los Angeles area. Joining us live now is ELLIOT Salter, longtime owner of ELLIOT Salter Pawn Shop and Loans in West Hollywood. ELLIOT, thank you very much for coming to the line here this afternoon.
Pleasure to be here, Frank.
Wonderful to have you with us. I hope all is well there. And give us an update on what's happening there as people come into your place. Are they buying or selling gold and silver these days?
People want to buy gold, but they want to buy it for less than I can melt it for. It's pretty amazing. It's because the prices of gold, it's just so high. 2 years ago, things probably cost, in my mind, a third of what they're selling for now.
Isn't that something? You've been doing this for, what, about 50 years or so? Did you ever think you'd see gold approach $3,000 an ounce?
Not in my lifetime. So I don't know. Maybe my life is going to be over in the next 10 minutes, but I doubt that.
Take a deep breath.
Take a deep breath. It's quite amazing. It amazes me constantly, but I think it shows that the world economy is questionable because people are running to use gold as a hedge.
All right, and silver back above 33, well off its all-time high, which was $50 an ounce back, I believe, in 1980, by the way. What about silver here?
I think people are buying silver for an investment or a hedge. People say it's an investment. I say an investment should give you a dividend, but it's a good hedge against economic crisis, and I don't see that happening. But if I knew anything, I would probably be sitting on the 47th floor buying and selling commodities.
All right, and platinum, you remember the days when platinum was more expensive than gold. Right now it's trading at around $1,000, whereas gold is near $3,000 here.
Yes, it was always people come in and go, well, isn't platinum better? I go, well, if you want jewelry, there's nothing like platinum because it's such a strong metal. But platinum has remained constant, I guess, because of the industrial uses of it. It's good for electrodes and electronic stuff. Gold is great to wear, and I think that's one of the reasons people desire gold. They know gold. They're familiar with gold.
On the line with Elliot Salter, the longtime owner of Elliot Salter Pawn Shop and Loans in West Hollywood. And since you're on the front line, really, of the economy here, Elliot, how's the economy these days?
It seems okay. I mean, people are always borrowing money from me. Right now, it seems they're having a little more difficult time paying it back, but I try to work with my clients to make sure they get their stuff back. I have enough stuff to try to sell. I don't need any more of it. But things are okay. People are worried, but I think things are okay.
What are some of the hot items these days that people are looking for?
Oh, they like nice camera equipment, good lenses, always watches. Watches are funny. It's a status symbol, and because you sure don't need a watch to tell the time because everybody's got a smartphone. But lenses, watches, camera equipment, musical instruments, nice guitars are always desirable. People are collecting too much stuff.
And you're leading the parade, I'm sure. Elliot, thank you very much for taking the call. It's always great to speak with you. Glad to hear things are going well there, and we do appreciate it. That is Elliot Salter, longtime owner of Elliot Salter Pawn Shop on Santa Monica Boulevard in West Hollywood, live with us here on Mottek On Money on 790 KBC. This on a day the S&P 500 achieved an all-time high, coming off the three-day holiday weekend. The S&P 500 moving up 14 points, settling at 6,129, a record high close. The Dow moved up 10 points at 44,556. And the NASDAQ up 14 at 20,041. Gold, by the way, hovering right now at around $2,953 and change. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money on 790 KBC.
Bombas makes the most comfortable socks, underwear, and T-shirts.
Warning, Bombas are so absurdly comfortable you may throw out all your other clothes.
Sorry, do we legally have to say that?
No, this is just how I talk, and I really love my Bombas.
They do feel that good. And they do good, too. One item purchased equals one item donated.
To feel good and do good, go to bombas.com/listen and use code LISTEN for 20% off your first purchase. That's BOMBAS.com/listen and use code LISTEN at checkout.